Hi, my name is Danny Dobris and I'm with Thai Traders, and today I'd like to discuss and show you how I use the opening range to trade the S&P E-Mini Futures and other futures. What is the opening range? Well, basically the opening range is a very popular concept. It was first introduced by Toby Crabell in his book Day Trading with Short-Term Patterns and Opening Range Breakout. Since then, it's been developed by many other people, but basically, all sources agree that the opening range is a powerful concept, but there is no unified method to properly identify the price and trends and the correct conditions to properly utilize them. So, most of what is written is guidelines and suggestions. Alright, so what is the opening range? It is the period which traders are going to act in response to recent news and observe the initial price movement of a particular stock. Traders use the opening range very frequently and they acknowledge it as a powerful concept. The opening range is defined by two components, time and price. Right, time is the length from the opening and usually to the first 30 minutes of trading for stocks. I use the first minute when trading futures. And don't forget that economic news is usually released at 10 o'clock. Price is defined as the lowest price and the highest price during the time span of the opening range. So here's S&P E-Mini Futures, the ES, and this is just the other day on Friday, August 9th. And I already gone ahead and marked off the opening range. These are 1 minute bars since I trade. I'm using a 1 minute opening range. So here at 9:30, I marked off the low of the opening range and the high of the opening range for that first 1 minute. Now there are several tactics to trading the opening range. One is breakouts, and that's when a stock or the ES is going to break out. It's going to close and crosses above the high of this opening range. And then there are breakdowns when the stock close or the futures crosses below the low of the opening range. Very commonly we know breakouts and breakdowns when a stock breaks support and resistance levels. So this is acting as resistance and the bottom is going to be acting like support. So here's a go. So you can be aggressive and you can buy the breakout or sell the breakdown. And the idea is to get in early to capture the best price. Of course, always use proper money management and make sure you have the proper lot size for the stop loss you would be using. So here on Friday, the market opened. We pushed up a little bit. We then came back down. It did break the bottom of the opening range, but we waited a little bit. And then we got these 1, 2, and then on the third candlestick, the price broke above the opening range, which was 1692, and then went higher. So you would have had a buy stop placed at 1692 and a quarter, would have got elected off, and then it just, as you can see, took off, and you would have captured a 4-point move up to 96 and a quarter, where most probably I usually take half off and just move my stops to break even, and then I would have, as you can see, it then came back down and would have been stopped out at break even. Okay, breakdowns is going to work the opposite way, and as you can see on this chart, the futures did continue to trade lower after it made its highs, and it did break down, and it pierced through the bottom of the opening range, which was, let me just check, 91. So 90.75 would have been your entry. And as you can see, it went lower. It did come back up, but then it finally went down to make new lows at 1682.50. So that's one way you can play the opening range, uh, taking breakout and breakdowns. Another one is retracements, where you would buy or sell the retracement of the breakout or breakdown. Okay, the idea is that the opening range will act as support or resistance and gives more evidence of the initial move. Right? The only drawback is not all breakouts or breakdowns will retrace, so therefore you can miss a big move. Perfect example of that again is from that day, is that it did break out, but it never really retraced. Okay, it went up and it just kept going for 4 points. I mean, when it did finally retrace, you probably didn't want to get in because it, obviously everything was looking lower. But on the breakdown, we did get we did get a good retracement where it broke down, it came down, and then it retraced back up to the opening range again. So if you missed the initial breakdown, you could have got in on the retracement. It did go a little bit higher. You would have had a little bit of a drawback, but probably would have never stopped out. And then it finally continued and headed down to the lows of the day. Another way of playing the opening range is the second breakout or breakdown. And this is when we break out or break down, then come back into the opening range, and then break out or break down again. Again, same drawback. It may not ever happen. You may never get that coming back in. But again, on this day, another example of that would be, here's the breakdown. Again, coming back down, breaking the low of the open range. It did come back up into the opening range, even a little bit above, and then it broke down again. So there's the second breakout, or breakdown, I should say. Second breakdown, heading back down to the lows. I don't think, let's see, after we made the lows, I think it was a steady climb back up. They did try to get above the opening range here, but didn't go very far, as you can see. And then she fell apart and went lower again. These are the most common ones, but there are two more that I like. I also make a note of the opening price. And sometimes we'll break out or break down and then come back into the opening range. And then we break through the opening price, and you would take a trade in the direction that it's breaking. So a perfect example again on the after it made its highs, came down and back up again. As it was coming back down, opening price was, I believe, 91 and a quarter, or 91 actually. And so you would have taken the break of 91, so you would have short 90.75, which is basically the same as the breakdown, but on that day. Okay, or heading back up, you could do it the opposite way. We know that the opening price was 91. It went down, it came back up, and I would buy 91 and a quarter, though it didn't get too far. I believe this only got to 92.75 and then fell back down. Okay, so obviously you have to watch, all other factors that are going on in the market. But just for another example, if let's say we traded down a lot higher here, or even not, we traded down and basically the market came back up into the opening range, you'd buy 91 and a quarter. That's being pretty aggressive entry, and then obviously it got back up to 96 and a quarter, so you wound up capturing an extra point instead of making 4 points by getting it on the breakout. I got in a point better because I bought the break the breakout of the opening price, the break of the opening price to the upside, and caught the 4 points. And the other aggressive trade that I like to take is the break into the opening range, or selling the break of the opening range after it has left and is now coming back into it. Okay, so basically same concept here. It breaks down, it comes back up into the opening range. As soon as it ticks above it, you would get long ride it up. So coming back down, it breaks the top of the opening range into here. You would short it. Okay, it came down, little drawback. I mean, this one would have taken a little time, but eventually, as you can notice, again on Friday, it would have got the all-time lows. Okay, so we're running a membership sale right now where you can get access to the E-Mini trading room. You'll get a free 2 weeks and 20% off for the month of November. Just use the promo code STMNOV13 when you go to sign up. And you might be asking yourself, where do I go sign up? Well, go to TideTraders.com. Click on Member Services. Then click Short-Term Momentum. And then click STM Introduction. Scroll down to the bottom of the page. And this is where you would sign up for the subscription. All subscriptions do come with the 14-day trial. I want to wish everybody a great week in trading and hope to see you real soon.